Good morning from a warming up Chicago. It is 8:01 a.m. Chicago time on the 29th of December 2022. It is Thursday today, and fingers crossed things don't blow up with this broadcast. Not having too much luck this week with tech issues. This is episode number 2382. We should be at 2384. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A quick dive into the convergent trading pre-market summary sheet. We have a market that is in a slight risk-on sentiment. The NASDAQ is leading up. Note that the NASDAQ has been leading down all along. It's been weaker. I've talked about this a fair amount in Convergence Trade Talk on Tuesday. But today it's popping higher. Looking at the underlying stocks pre-market here, you can see why that is. Here's the heat map for the pre-market on the S&P 500. Apple up 1.59% already. Netflix up 1.68%. Nvidia up 2.74%. Tesla, which has gotten its teeth knocked out this last month or so, up 6.11%. Amazon up 1.47%. And those represent a significant part of the FANG man or the FANG stocks. And they've lost quite a bit of their market cap this year, but still they're movers. The other big sector that's pulling up is commercial services and finance, as you can see in this chart in front of you. So this is why the NASDAQ is showing strength more so than others. And just one second. And so this is where the mild risk-on sentiment's coming from. We see the same across Europe. The Bank of Japan is in an unplanned bond purchase operation. This is the second day in a row. There is a growing concern that the rapid and all of a sudden massive opening of the Chinese policy on COVID, the zero tolerance policy, has been canned for now. Hong Kong just came out about an hour ago stating that it's ready for whatever surge takes place. Not really sure about that, but there's this big issue with China. I think 2 days ago, the Wall Street Journal was saying that they had 5,000 deaths a day and 1 million new COVID cases a day. 1 million new COVID cases a day in China. And of course, you know, a lot of people, or not too many people, but some people were inoculated with the Chinese, whatever it's called, antivirus. And supposedly it's not effective. Those who tested it found it to be ineffective. So there's this kind of fake sense of security, and we're seeing the numbers surge. This is an important thing to watch because yesterday the U.S. announced, last night, the U.S. announced that it's restricting anyone from coming back into the U.S. from China or having traveled to China from coming back into the U.S. without a negative PCR test. Italy has jumped on that bandwagon, among others. Italy's demanding that the entire EU should have this policy. This morning, we got initial claims. Initial claims came in at 225,000, in line with the expectation. The overall jobless claims came in. Whoa, what happened here? The overall jobless claims 4-week average of 221 was expected at 225, so still slightly hot. Continuing claims actually popped a little higher. Continuing claims came in at 1.71 million versus the expected 1.686 million, which was a drop from the prior of 1.669 million. Today, what's left is natural gas at 10:30. We have crude oil for those who trade crude. We have crude oil coming in at 11 o'clock today Eastern time, and that pretty much wraps up the week. We do have a 7-year bill auction. One thing I would like you to note, though, one thing that I'd like you to note is that apparently tomorrow's expiration in futures, in options, has a huge amount of gamma in it. The expectation is that there would likely be an end of year, end of month, end of quarter. So end of month, end of quarter, end of year is tomorrow. There is very likely to be a pretty strong move, at least into the close. It is highly recommended that you do not trade the last hour or so of tomorrow if you are trading. It might be an interesting thing to watch, but just be careful. The whole day really has these massive expirations taking place, and it's very likely to be a big kind of OTF day tomorrow. Okay, so that's what we've got. Looking at the S&P itself, the S&P is traded 138,000 contracts. The inventory is 99% long, meaning that 99% of the volume that is traded in the overnight session took place above the prior close. We have 33.5 points of range, and the point of control is at 38.09 this morning, with a market that has pushed to 38.06. So really it opened to push down into the prior settle and then turned back up and has been rallying. We are at yesterday's mid for the session. We're trading squarely in yesterday's range, and that's where we stand. Now, I want to remind you one more time to go vote so we can put on some positions in the CME event contracts for today to keep growing the charity account. The charity account's currently at, I believe, $10,212. We have one more day to do this, one more day, and that'll be tomorrow. So based on your votes, I'll put on the positions in EdgeClear's proprietary or house account. These are live positions. And then we will finish up the year tomorrow, and we'll report back whatever the account value is at the end of tomorrow. Once the positions close, that amount will be donated to St. Jude's Children's Cancer Research Hospital, which is a great organization. So they should expect to get somewhere around $10,000 or $10,200, depending on how the positions do today. So be sure to take a moment. Let us know if you believe the market will settle above or below the prior settlement in the ES, NQ, or crude oil, and then we'll put those positions on. So let's take a look at the markets here. All right, so what we're looking at here is just the overall picture, RTH session only. RTH session only. This is the overall picture of what's going on in a market profile chart. Each bar here represents a day. When I squish them, they turn into these narrow bars. But let's zoom in. So this is where we are in the overall picture. Remember, we've been talking about 38.60, which is where we were yesterday. We went and poked the double top here at 73. We poked it, failed, turned over, and sold off yesterday. Very methodical there. And what we have this morning is we have a market that is trading at 38.36. So we are against yesterday's value. Basically, we closed at the low. We had a pretty decent range extension down yesterday. We moved from balance to imbalance. Here's a better view of that. This is I posted this on Twitter yesterday, not sure if you saw it, but we were in this big balance, which went as high as 41.44 or something like that. We retested, put in a lower high up here. This was on CPI, then FOMC. FOMC is right here. And these 3 days represent imbalance to the downside, so a trend or a break lower to the downside. And then we came in and just pumped the brakes and traded sideways since December 16th or so. We started to trade sideways. You know, it looked like it was continuing to fall, but it didn't. It started to trade around itself. And as a result, we aggregated all of the profiles from December 16th through Tuesday. Okay, and we found that we are in this, again, a pretty sharp balance zone. And we opened right on top of the point of control, this balance zone right here at 38.60. Opened right on top. We tested higher early on, and then we started to be initiative yesterday away from this point of control. However, we're still in this balance zone. We haven't really breached anything or done much yesterday, as much as it looked like yesterday was going to just run away. And it had a pretty decent selling delta yesterday, but overall we're still in this, caught in this the net here of this balance below here. So this is where we settled 38.07. So we're in this big balance area. We still have multiple areas where the market really ground out and fought any selling. The ultimate price down here is, of course, this 36.40, 36.50. That's the last kind of trench that the sellers have to break through and overrun. But right now, the ES, given the time of year and so on, normally would see a rally. You know, there's a higher probability of a rally into the close of the year, Santa Claus rally. We're not seeing very much of that. We may see a pop today, but even if we do get a pop today from where we are now, 38.40, we're still looking at probably 39.04 as a cap right up here. 39.04 as a cap on prices to the upside. I'm expecting resistance between 3900, which was yesterday's overnight high, and 39.04. So it you know, as much as it looks like there's a lot going on here, this is yesterday right here. This is an hour. Let's turn it back to a 30-minute. As much as it looked like it was pushing yesterday, we did have an impulse pullback, continuation trade, consolidation, nice big zipper in the overnight session against the settlement down here before it turned back up and hit the mid of yesterday's session. There is some resistance here in that 38.45 area, so that's your first kind of line in the sand this morning for buying. We want to see how it does at 38.45 to 50. If it takes out the 50, it is very likely to push to 73 again, and then back up and into the upper range into 3900, 3904. That's how things are setting up. So what does this look like? It's still loading the volume data here. What does this look like if this thing opens up, pulls back, unable to really push much lower than 38.20? This right here, if it's not able to take out this zipper at 38.20, which is a decent long in my opinion early on, and starts to push higher and into 45, I'm expecting a fight at 45. But this is where the if-then statement comes in. If it takes out the 45, pulls back, weak pullback, then we're looking for it to push to 38.60 again, and it may squeeze into that 73 area from where we are. Now, 73 to 34 is only 73 to 34 is only 35 points. That's not within our daily range. What is within our daily range is the 3900. So if it does squeeze through this crucial area of 50, 45.50, it is very likely to push to 3900 and 3904. So the map is 3904, 39, the double O right here, the 60, the 73, the 60, and then the 45 to 50. Those are all kind of watch and see areas to the upside. To the downside, we have a gap to settle trade potential here. We're opening away from settlement on an inside gap, back to settlement. So 34 down to 07. So that gives us that gives us a pretty decent 27 points or so to contend with. And if it takes that out, then you're looking at 3,800 is the next key area. That's a century figure. And then we start to work ourselves down into 3780, 3780. And then we really need to look to the left on that TPO chart to see where those balances are and what it might target. This is the lay of the land, or the battlefield, that we are currently finding ourselves in. And you can see that the market, has taken these big dips and then just push right back, consolidate, take another dip. This is very likely to push right back, and so on. And this is just a hallmark of balance. This is how balance generally operates. If you look at, let me kill these fractals. If you look at how it's been proceeding, it is sort of cautiously selling, or it's selling in balance is the kind of movement that we're seeing here. Overall, we remain below the monthly VWAP. We remain well below the CPI and FOMC releases, which were well above us. We remain below that big wall at 4,100, and it just looks to me like it wants to move back into that number that I said earlier, the 3650 or so, down below. It really doesn't look all that healthy to me. Yeah, crude is making a run for it here. So we get crude, which had a reversal day yesterday. Crude pushed down and broke the prior low. Had pushed to the 50-day. Crude pushed to the 50-day simple moving average up here at about 81 or so, and turned right over, and then had a selling day yesterday and tried to pop, and it came right back to this resistance back here. We have a stock zone. We had this stock zone. I didn't actually move any of my stock zones for crude today versus yesterday. Pulled right back to prior resistance here at 79, 79.10, and continued to push lower, and I'm expecting crude to continue its drop. Crude has definitely been an interesting animal. It still has a gap at 77.03 to 76.70, 76.78, 98 or so, and it's filling that in the overnight session. Crude has been in a short-term balance here of several days. Crude has been sitting in a balance since the 21st. It made a nice run higher, but is turning back over. The next stop for crude is 76 right here. This notch out in the volume profile. 76 is the next key target, brings it into range of this balance. Crude has weak structure from 73 down, and if it breaches the 73, it is very likely to test all the way down into the 70 area. Crude looks really fragile right now, and they're doing whatever they can to support it. While I'm here, let's look at the NASDAQ. The NASDAQ has been really interesting. It has really taken a beating, and multiple times it created this megaphone kind of formation. This is RTH only, so you can see the NASDAQ created this megaphone formation and has broken to the downside decisively with the FOMC, CPI and FOMC, and has really not had very good rotations to the upside. So if you compare the NASDAQ's performance to the downside versus the rotations up. So if I took a daily chart and plotted what are the zigzag rotations down versus up, they would be very poor. Here's your zigzag high, here's your zigzag low, okay? So you look at this push and you look at the pullback and it's just really poor. Can't even get to the single print here. Then you have a push down and a pullback is relatively poor. So if the push down is X and the push up is only a small percent of X, 25%, 30%, something like that. And we continue to see that. So the NASDAQ, although popping higher this morning, trading at 10,893 from a settlement of 10,773, so 110 points higher. It's up 110 points today. It is still pushing into current resistance, right? So the NASDAQ's near highs. It's still pushing into current resistance and still has a lot to work through in terms of lower highs. The NASDAQ remains on a weekly one-time framing down as well as daily one-time framing down, and would have to take out yesterday's high in order to reverse this at 11,000. Okay, so 11,000 has been pretty much a cap for this thing for the last 2 days. We'll see what it does today. Let's dig into the order flow a little bit. ES, here's the order flow. Look at the performance. So we push up yesterday to that 73, break the week highs at 73. We had a kind of a double top at 73. We break the week high, and man, the delta just completely dried up just as that happened. So if I zoom in here, you'll see that we poke through, then we tried to pull back, tried to make a couple of pushes for it, and as soon as this downdraft happens, this impulsive move down happened, the delta went from high of day to negative on that one move very, very quickly and was never able to recover above zero from there. So, despite the fact that we had these pullbacks and so on, you see this pullback, this relative to this, you could see that the delta just had no chance, and it just kept dropping pretty strong throughout the session. Pretty strong selling into the ES yesterday. Since the open today, this is our delta, our volume delta, by the way, not to be mistaken or confused with the option delta. Our delta just means a difference, right? It's a word that designates the difference between two items, and this is what this is tracking. It's the difference between the aggressor buyers, those who bought at market, minus those who sold at market, and gives us a total number of contract imbalance that there is. And what we have here is we push down into the prior settlement. It looks pretty negative to me, but its price is unable to hold below settlement, and then it starts to squeeze up. Now the whole delta is controlled by small lots, which is pretty typical in the overnight session, but you can see large lots have been a seller on this rally to 38.39. So it is we don't have kind of agreement between the participants here. As we come into today's session, we've got some large lot players playing in this rally with the small lots, but very large lot players, the yellow line. But overall, as soon as the very large lot players are done, so they're done right here, so you can see they kind of went flat. From there, the large lot players have been selling and bringing the delta back while price remains high. So today, we're likely to see a decent move right off of the open, right? So we are actually in range of the prior session. So let's look at this chart here. So we are in range of the prior session. Here's the prior session, multi-distribution profile, no real clarity there. And then we are right in the middle of the prior session's profile. So we're looking for 45 and we're looking for a move right off the open, whether it is to test higher and respond back. So if it tests higher, my plan, I'll leave you with my plan here. If it tests higher into 45 and fails to hold that 45 for a push through 50, then I'm looking short and it becomes a gap to settle trade, right? So gap to settle. That becomes the trade. If it pulls back immediately, inventory is very high at 99%, and it holds this 22 to 20 area, and then it just gets weak pushing down, then I'm looking for a long to 45 to clear, scale ahead of 50, and now I'm looking for 73, the prior day's high, and a reversal in I'm looking for a reversal higher in the trend down, and I'm looking for it to start to squeeze to 3,900 in this situation, with big obstacles, as I highlighted earlier in the video, at 60, 50, 45, and then 73 up here. Those are the two key trades of the day. I know this went long. Good luck today, and I'll catch you tomorrow morning. Take care.